Welcome to Equity Stories with Inderes. In this video, we will cover MGI Asset Investment together with the CEO, Remco Westermann. Welcome, Remco.
Thank you, Anton.
To start things off, could you please introduce MGI to us?
Yeah, MGI, Media and Games Invest, is a company that concentrates on majority of our business now is advertising. So we have an advertising platform where we bring advertisers and publishers together. It's all digital, and it's almost like a stock exchange. So we auction the ad slots to the highest bidder, and that's basically what our business is.
Yeah, so we could say you are active on the sort of programmatic advertising market.
Exactly,
Yeah.
That's the professional word for it.
Yeah, so in general, what's happening on the programmatic advertising market that sort of drives the need for MGI's products and services?
Yeah, advertising overall is a big market, of course. People need advertising to promote their product, to make money with free content, for example. So in that sense, advertising important. The thing is, however, that more and more channels are coming up, more digital channels. We talk about thousands of apps, hundreds of digital TV stations, and that's impossible to do that all manually or to just by calling and making contracts. So we do that in a programmatic way, like a stock market does it, catering, or let's say trying to find the best fit between an advertiser and a publisher. Yeah, market overall is growing, the overall advertising market, and within that, the digital advertising, the programmatic advertising parts are even growing faster because of taking over part of the traditional markets.
Yeah, as you mentioned, the overall market is growing. How would you see it on a 5-year basis? Do you think we can expect a lot of growth, or?
Yeah, if you look at analyst estimations, the overall ad market is growing 6% per year on average. And if you look at the programmatic, it's expected to grow 10% per year. At the moment, we cannot talk about growth because we are in an economic downturn. So at the moment, basically, we're talking an almost flat market. Prices have gone down, so there's less demand. People spend less, or companies spend less advertising budgets at the moment. And if there's less demand, the prices go down, so the CPMs are down. And that means that overall the market is, let's say, yeah, if we look at the customer base that we had a year ago, they do 6, 7, 8% less revenue now than they did in the year before. And that has to do with those lower prices, lower budgets. So as a company to be flat in this market, or to at least be the same revenue as last year, you need to do quite a bit of work with onboarding new customers. And that's what we are working on.
Yeah. What do you think it will take until the market starts growing again?
More positivism. Let's say one of the things, of course, is the interest rates. There we see, at least at the moment already, that the expectation is that it either will go down or at least will be flat. That gives people more certainty. Then the consumer is still a big unknown. There's a lot of expectation that because of extra inflation, extra burdens, energy costs, all those things, that the consumer might be spending a bit less. That also would have impact. So there's still a lot of uncertainty in the market. Companies sometimes show better results, but a lot of them are struggling. And as long as people are struggling, they look at every dollar. And even though marketing helps to increase market share, they might also, because it's a fast way to save money with it.
Yeah. What would you say sort of makes MGI stand out from their competitors? And conversely, what would you say are your sort of competitive disadvantages?
Yeah, we are fast growing in this market. So we did let's say we have a clear vision or clear view here. We want to be a vertical platform because there's often too many parties between the advertiser and the publisher, which is just waste. I mean, a lot of margins taken, a lot of intransparency that comes in. So that's one of our pillars that we're looking at. The second is in-app. Apps are more and more important. If you look at the time people spend on apps, that's very big. If you look at the advertising budget spent as percentage of the total advertising, that's still relatively small. So there's a lot of potential in in-app advertising. And via our acquisitions, we have bought a big SDK base, so being integrated in a lot of apps. We have our own apps from our own gaming business. So with that, we have a lot of reach, and that makes it very attractive. Then data is very important. We're talking about a market where targeting is everything. If you spend $100, you want to target as good as possible your advertising budget to get as much yield out of it. And that it means data. You want to reach the right people. So the more you know about the one who opens the app with the ad in it, the better it is. So data is super important. There's another aspect in data. Identifiers are disappearing. Apple did that already with IDFA. So that's also something that you need to take care of, which means targeting without identifiers. It's called contextual targeting. So that's basically our third part is data. And the fourth part that we're focusing on is CTV, connected TV. We see a strong move from traditional linear television to digital television. And digital television is cool. You can target much better. You can send individual ads and all these things. So that's another area that grows very fast and where we're focusing on.
Yeah. And now about the competitive disadvantages.
None, of course. No. Let's say we're still small, I think. Size matters. We have been growing fast. We started as a gaming company, but we're doing the advertising part now since 5 years, a bit under 5 years. It's growing fast, but I still think there's a lot of potential. Organically, but also inorganically, the market is consolidating. So that's, I think, one of the main things. And the other one is, but that's more general market challenge, is the macroeconomy at the moment. You have to fight against a market where budgets are lower. Yeah.
So when it comes to MGI strategy, which aspect are you currently prioritizing?
Yeah, we're focusing on the 4 pillars that I just mentioned. So in-app is absolutely number one. We have a leading market share now in the US, which also opens a lot of doors. We have increasing market shares in Europe. We're among the top 5. In Asia also, Southeast Asia, we are focusing on that. So in-app is super important. The CTV, we had some really nice connections also in the last quarter, or new stations that we connected where we have direct supply. So that's important. And data and then the vertical. So those are the 4 things that we focus on. I mean, the market is huge, but you need as a company to focus. And I think that's the ones that we're good at. And that's the ones that we also expect to drive our growth in the future.
Okay. When it comes to these 4 pillars, what do you see as sort of the biggest risk or challenge in sort of being successful in executing this strategy?
Yeah, it's of course estimating right what's happening in the market. And we were so far pretty right because advertisers are more looking for direct inventory. They don't want 10 parties or 5 parties in between. So there we were right. Contextual cookies going away. We invested very early in it. Some of the investors had something, why are you investing? It might be postponed and go longer. It's right, it's happening now, so that's helping us. So a lot of this, it's a dynamic market. So I think the biggest risk and also the biggest potential or the biggest chance is really reacting in the right way to the market. And alone this cookie deprecation or the identifier deprecation is a huge opportunity. And we see, similar to when GDPR happened in Europe, a lot of companies think that it will be postponed or might not come. They're not prepared. And we see the same in the advertising market with cookies. A lot of them will be suffering at the moment, the deprecation happens.
Yeah. You mentioned earlier that MGI has been growing pretty fast historically. How do you see sort of balancing growth versus profitability? Is there one you're prioritizing over the other?
No, we want to do both.
Yeah.
We are not a company that's only growing without being profitable. I think that the recipe did never fully exist in Europe. And in US it did, but it's not anymore en vogue. No, you can grow being profitable. We are, let's say, looking at our midterm targets, and we have been mostly in or above it. It's 25 to 30% growth per year, and a 25 to 30% EBITDA level with that. And that's, I think, a good combination. We have been growing much faster in the last years. This year, therefore, because of the market, is basically a flat year versus last year. But we have increased our profitability. We went up in Q3 to 29% EBITDA. So we are really controlling our cost well. And it's, based on your question, it's a balance act. We need to do both. Yeah,
but you don't see there's a trade-off between them two?
Of course there's a trade-off.
Okay.
I mean, if you, let's say, you can be loss-making and invest a lot, but then the question is, does it really come out? And on the other hand, you can be, super profitable and not invest. It's a trade-off, of course.
Yeah. But profitable growth is the goal.
Yes, that's what we have shown in the last years, and that we're also further showing.
Yeah. So the final question then is sort of, how do you aim to create value for your owners?
By growing profitably. I think that's the thing. I mean, it's, we have shown in the last years that we are able to grow this company very nicely, that we're pretty nice at positioning it. We started as a gaming company. Gaming is not always easy, but combining gaming and advertising is a brilliant combination. There's a lot of synergy between the two. It's unique ad spot. It's a lot of unique data, special data. It's a possibility to test your applications faster. And on the other hand, for the gaming, it's an easier way to do user acquisition, cheaper way. So there's a lot of synergy between the two. And for us, it's further grow. And we further invest in growth, even though we did a cost operation, but that was more, we also integrating platforms, which we acquired. That saves a lot of cost. So as such, it's growing, getting new customers on board, but on the other hand, watching the cost.
Yeah, great. Well, thank you for joining us here today, Remco.
Thank you, Anton. Thank you very much.